Welcome, ladies and gentlemen, to Commodity TV here in Zurich at the Precious Metals Summit Conference in 2024 November. And now with us here for the first time, G Mining Ventures, and it's Jessie Liu-Ernsting. She's the Vice President of Investor Relations. Welcome and good morning.
Thank you so much. Good morning.
Yeah, thanks for taking the time. We know each other already from Canada Nickel, but now G Mining Ventures, great company, I must say, when I went through your presentation. And yeah, congratulations to your commercial gold production in Brazil at Tocantinzinho. Fantastic. Well done.
Thank you very much. It's been drinking from a fire hose for the past 3 years since I've been with the company. We've, obviously acquired asset from Eldorado, announced positive feasibility, raised the project finance, and then, of course, ramping up on construction, and then now into commercial production and continue to ramp up toward nameplate capacity.
Yeah.
And in the meantime, we keep on growing the company as well.
Of course, also. Super. So how is the production so far going? I mean, you said you are now in commercial production, but that was, I think, in September. So you had for that quarter only 1 month of production. Now, the next quarter, I know that the numbers are not yet out, but I could imagine they will be quite good because you had an average gold price of $2,600 per ounce, and you projected in your feasibility study, I think, only $1,600.
Exactly.
So it looks like a real cash cow.
Exactly. If you look at our feasibility study from early 2022, it's already an extremely economic project, even at that base case gold price of $1,600. And then, so of course, the extra $1,000 is just gravy on top. Yeah, exactly. So in this business, it's always good to be lucky. And then we obviously couldn't have timed it any better. But yeah, we are extremely pleased with this gold price environment and how well the project is going. Ramp up is going great. And costs are largely in line with our feasibility study estimate. So
what is the AISC around approximately?
So it was going to be around 700 per ounce. Oops. And so of course, with the only 1 month of commercial production so far, the cost is not really, I guess, representative of the cost going forward, but we do envision this to continue to be a very low cost production mine.
Even if you're at $800 or $900, sorry,
exactly.
That is fantastic.
Exactly.
That is really good. Super. So the ramp up is successfully. Commercial production is running. You said nameplate capacity. When next year? What do you think?
By about the end of this quarter, Q4 or early Q1 of next year.
Okay, and that would be then how many ounces per year, the nameplate?
So for the first 5 full years of production, we're actually forecasting almost 200,000 ounces per year. And the life of mine production is going to average 175,000 for 10.5 years.
Okay, wow. Fantastic. I mean, that sounds like a very profitable business.
It's a good business. Yeah.
Fantastic. So, okay, that's really working well, I would say. Let's move shortly to, I think it's Guyana, right?
That's right.
Oko
West project.
Oko West, exactly. That's the next probably mine you want to bring in production, right?
Yeah, exactly. That's what our, construction team's focus has shifted toward. So before commercial production at TZ in Brazil, we already did a handoff between the construction to the operation team. So then the construction team then is able to shift their focus to Guyana and, focus on the engineering, working on the feasibility study, and then eventually, early works and then construction at that project as well. And then, of course, using, in your words, the cash cow of TZ as the cornerstone to fund a large portion of the capex at Oko.
No dilution for the shareholders, right?
Less I'm not making any promises today, but it's going to be very minimal.
Let's call it reduced dilution.
Yeah, it would be very minimal because, as you would understand, as a cash flowing company as well, lots of different options open up to us. So we're having conversations with commercial banks on, corporate revolvers and equipment finance and peer companies recently have also accessed high yield bond market. So there's lots of different levers we can pull to minimize our cost of capital and maximize return to our shareholders.
Is Oko West Gold only, or for example, is it gold, silver? So meaning, could you sell a stream or whatever?
It's primarily gold.
Okay.
Yeah.
Good. So it would be
Yeah. So we would,
financing.
we would not be looking at dilutive financing options like a stream, because just of different sort of existing royalties to the government and so on. And like I said, there are way more lower cost of capital options available to us now. So yeah.
Of course. That's fantastic. So then the longer term future looks to me a little bit like, now we are going back to Brazil again. That's the CentroGold, which is a large exploration space. I think almost, what is it, 1,900 square
It's
kilometers?
exactly. It's
right?
almost 2,000 square kilometers. It's I know it's probably
That's
larger than
5% of
some.
Switzerland.
I was going to say it's probably larger than some small European countries. But yeah, it's a large land package, very prospective, over 80 kilometers long of a greenstone belt. So similar to, the Abitibi region in Canada, which has produced lots of gold. So, there's lots of showings on this land package. There's already an existing JORC compliant resource that that the previous owner had produced. And so the first order of business obviously is to close the deal. We haven't closed on the transaction yet, just due to having to meet some regulatory requirements on the BHP side. But after that, our first order of business for us would be to convert the resource to 43-101 compliant. Then people would really be able to see, sort of that underpinning of the value in this project, and then we'll start doing some kind of baseline study and exploration work as well.
Yeah, so that's production then after 2030.
We're not putting a timeline on it, but it is longer dated.
Yeah, definitely. Super. So let's assume the second mine is also fully in production. The next cash cow, could we expect maybe some dividends, share buybacks? Meaning, what do you want to do something for the investors?
We're open to all the different options to generate a return for our shareholders. And, management is a large shareholder group as well, but we're not the only shareholder group. So obviously we think of ourselves as more of a growth story, but if dividend is what our shareholders want, then, we can definitely discuss that. But, one of the key, I think, reasons that people like to invest in our company is for that growth trajectory, I think. So if you look at comparing us versus our kind of peer, intermediate gold producing companies, let's just talk from 2025, because that's going to be our first full year of production at TZ. We'll be producing, so looking at our production growth, there's a slide of this in our slide deck. The CAGR, the compound annual growth rate in terms of production from over the next 3 years is over 40% from us. So
that's beautiful.
We're going from 190,000 ounces, almost 200,000, to over 500,000 ounces. So that is the growth trajectory that's
wonderful, I would say.
You don't come across that type of story every day.
Yeah, that's right. Yeah, definitely. No, that sounds really like a great plan, I would say. Especially, I like your production costs. And thank you very much. We wish you all the best, and please keep us posted.
Thank you so much.
Thank you. Yeah, ladies and gentlemen, that was Jessie Liu-Ernsting, the Vice President of Investor Relations of G Mining Ventures. And you heard it. The first mine is successful in production. Commercial production is achieved. We look forward, of course, to the quarterlies, which should come out next, 2 weeks probably. And I think also with the project in Guyana, that's the next big boost in the growth story of this company. And longer term, don't forget another project in Brazil. So they are focused on South America, focused on Brazil and Guyana. Production costs are tremendously well below, I'm saying well below the $1,000 mark. That is super. Yeah, so lots of room and for improvement. And please don't forget, the feasibility study was at $1,600 gold. We are today at $2,600, $2,700 for Tocantinzinho. So this company is really making money next year onwards. And this is what we like. And obviously management is also a large shareholder. So dividends, share buybacks, they take care of the shareholders. And this is also something really positive. Really check out that great company. Thanks for watching us, and bye-bye from Zurich.